Could Rivian be going bankrupt now? Could Rivian be going bankrupt? Now, I know that sounds a bit dramatic, but things at Rivian have never been worse. On Monday, May 9th, Rivian's shares sank 20.88% in a single day after its stock lockup period for early investors expired. Essentially, early investors were like, oh, I can sell my stock now? I'm gonna go ahead and do that. And that is just part of the story because at one point last November, Rivian had a market capitalization of $153 billion. And that $153 billion market value was higher than every other automaker in the world except for Tesla and Toyota. The company was worth $153 billion despite the fact that it had only delivered 156 vehicles before its IPO. Just take a look at this chart that shows Rivian's dramatic fall from the heights of the automotive industry. In early November, when they went public, Rivian was trading at around $100 a share, and by the middle of November, it was trading at $172 a share. But since then, things have not been looking good for the automaker. Today, its stock price sits at a mere $22 a share with a market capitalization of $19.87 billion, down from $153 billion in mid-November. In this video, we will discuss the macroeconomic factors that are attributing to Rivian's struggles as an automaker. We will discuss how they went from a market capitalization of $153 billion to a mere $19.8 billion in a matter of months. Now, if you guys like this video so far and are excited to see the rest of this video, please go ahead and hit that like button, and please consider subscribing to my YouTube channel, The Beat of Business. The first reason that Rivian's stock price is going down faster than ever is because of Ford and Amazon. You may be thinking, what in the world do Ford and Amazon have to do with Rivian? Well, Ford and Amazon were both early investors in Rivian, and they both reported huge quarterly losses due to their investment in Rivian. Amazon posted a rare quarterly loss of $3.84 billion, almost entirely due to a $7.6 billion loss in value of its stock investment in Rivian. Similarly, Ford lost $5.5 billion on its Rivian holdings in the quarter, causing Ford to report an overall loss of $3.1 billion. Now you may be thinking to yourself, why did Ford and Amazon invest billions of dollars into Rivian? In a nutshell, Ford invested in Rivian because they were interested in battery development, and at one point it was announced that they would be jointly developing a pickup truck with Rivian. However, those plans were scratched. Amazon, on the other hand, not only invested in Rivian, they also ordered 100,000 electric delivery vans as part of their Climate Pledge initiative. If you don't know what these vans look like, here is a beautiful photo that I found. But Amazon and Ford are far from the only big name investors that Rivian attracted, but they are the most notable investors that really spearheaded Rivian on the auto scene. Now that's the first reason that Rivian stock is going down. Now let's move on to the second reason. The second reason that Rivian stock price is down over 80% is due to supply chain constraints. You see, Rivian entered the stock market at a time when demand for electric vehicle stocks was high, and investors were willing to pay almost any price for the promise of increased market share and sales. The problem is that as much as people want electric vehicles, supply chain constraints mean that they can't have them. Even today, order fulfillment for many electric vehicles is 1 year or longer for many models across the world. And due to these supply chain constraints, Rivian expects to produce only 25,000 electric vehicles this year, down from an initial forecast of 50,000 vehicles that Rivian provided as a realistic production goal at the end of 2021. And that decline has only accelerated since the company announced in February that it is reducing its production forecast for 2022 by 50% due to growing part sourcing issues. On top of that, inflation is also impacting Rivian's pricing structure. Now, back in March, the company announced price increases of up to 20% for the R1T pickup truck and the R1S SUV. And people who have existing reservations are not happy about the price increases, and that's totally understandable. I mean, you reserve a car with the hopes of paying a certain amount, only to pay 20% more when your car is ready for delivery. Now let me get one thing straight. I'm a big fan of Rivian's products, but if you can't make your products, then people can't buy them. And if people can't buy them, you can't make money. The third reason that Rivian is getting completely annihilated is because the post-IPO lockup selling period ended on May 9th, and investors are dumping their shares. For those of you not familiar with what a lockup period is, here is a brief definition. An IPO lockup period is a period of days, typically 90 to 180 days, after an IPO, during which time shares cannot be sold by company insiders. Lockup periods typically apply to insiders such as a company's founders, owners, managers, and employees, but may also include early investors such as venture capitalists. In short, now that the lockup period is over, Ford, which owns an 11.4% stake in Rivian, plans to sell 8 million shares of its 102 million shares. And according to CNBC, JP Morgan plans to sell between 13 to 15 million Rivian shares on behalf of an unidentified seller. Amazon, however, has not stated any intention to sell their shares. Instead, they issued this statement: Rivian is an important partner for Amazon, and we are excited about the future. Putting 100,000 electric delivery vehicles on the road by 2030 is no small feat, and we remain committed to working with Rivian to make it a reality. But the fact that Ford and other large shareholders are offloading their equity doesn't really help the company from a perception standpoint. Most individual and institutional investors are less likely to invest in a company where the largest shareholders are running for the door. And there you have it, ladies and gentlemen. Those are the three main reasons that Rivian stock is getting absolutely destroyed. But I would love to hear your thoughts on Rivian. Do you guys think that the onslaught will continue? Or do you think that right now is a good time to start a position in the company? I haven't driven a Rivian yet, but I've seen plenty of reviews on their cars. And from what I can tell, they are an amazing company and offer some amazing products. So it's actually kind of disheartening and sad to see a company that is actually pushing technological boundaries struggle so immensely. And because of these struggles, Rivian stock is down over 80% since its mid-November highs. So the question becomes, can they recover? Or will Rivian have the same fate as the countless EV companies before it who ended up failing and going bankrupt? I guess we'll just have to wait and see. And with that, ladies and gentlemen, I'm going to call it a video. Thank you all for watching. I will see you all next time.